Good morning. Welcome to the B.F. Anderson Techno Fundamental Report for August the 10th. Well, we're in earnings season, and I must say this earnings season has been somewhat disappointing. You know, what you have to realize about these earnings reports is that this is a report card on a corporation. How did they do for the quarter? How are they looking for the year? And they give some type of guidance on the future. Now, this particular season, I believe, has been somewhat disappointing because what's important is not the report itself. What's important is the reaction to the report. And we're going to look at a few examples of that. A question we have to ask ourselves is, do we have an edge? Do we have an edge in the market? And as a small investor, you definitely have an edge, which means that you can take fairly large positions in a corporation stock, and you don't have something called liquidity risk. These large funds are like, think of them as a big oil tanker out in the ocean, and you're a ski boat. You can move around much quicker, so you do have an edge. Now, the important thing to be doing, I think, at this time is to continue to develop a stock watch list. I maintain a watch list of about 60 stocks. I update this watch list at least twice weekly, and we're looking for certain characteristics. So having a watch list, understanding your lack of liquidity risk really does give you an edge over these big institutions, actually. Now, Buffett, in this book right here, which was the Warren Buffett portfolio, talks a whole bunch about focus investing and how, having too many stocks is not a good idea because you need to be a know-something investor. So if you have a few companies and you can really pay a lot of attention, that's a good thing. So in other words, selecting anything versus being selective. You want to be selective. Also, be fearful when others are greedy. Be greedy when others are fearful. So we've been dealing with this market for the last, 2022 was certainly a period where there was a lot of fear. I thought this was an interesting quote here. It says, there are two kinds of investors, be they large or small. Those who don't know where the market is headed and those who don't know what they don't know. Then again, there's a third type of investor, the investment professional, who indeed knows he doesn't know, but whose livelihood depends on appearing to know. William Bernstein. Basically, in another book I read, there was a term used back in the 20s called customer's man, which meant that you would tell the customer anything he wanted to hear. So that's the problem with the business. Now, the stock market is never obvious. It is designed to fool most of the people most of the time. Jesse Livermore. The market is going to fool most people most of the time. It's going to fool me. It's going to fool you. It's like a card game. You have to have a strategy. With gin rummy, you can have a strategy of holding for gin, or you can knock, or you can cut your opponent. But you are not going to have an obvious win every time. So if you cannot make money out of the leading active issues, you're not going to make money out of the stock market as a whole. That's kind of what we're seeing now. Let's look at a couple of examples. Here's Apple. You can see here after their earnings report, you have the 10-day moving average here, and you have the 21-day moving average here. Basically, you got what we call a break, where it broke below the moving average. No big deal. But then it does something called a violation, where it makes a new low below the prior low. So you can see here with Apple, the earnings report, the stock did not react favorably. This is happening pretty much across the board. Now, Meta, which is Facebook, is holding up probably the best of this group. Now, this is that large group of stocks that have pretty much dominated the market this year. Microsoft, same thing. Announced earnings, you got the break, then you got the violation. Now you've got somewhat of a downtrend going. Not a good reaction. NVIDIA, again, this is the AI situation, artificial intelligence. You got the break, and now you're getting the violation. Here is Tesla. Now, we had Tesla. We had to sell the stock based on the fact that their profit margins are coming down due to new competition. In fact, I hear this year and next year there are going to be 30 new models of electric cars coming out. So the competition is really heating up. So not only did Tesla break and violate, but it's now breaking the 50-day moving average. So the reaction just wasn't good. So let's take another quick snapshot of the Copic index. I was talking to a friend yesterday, and I wanted to clarify what this particular indicator is all about. It's all about just trying to determine if the market has possibly or probably made a low. So again, just to refresh a little bit, let's just go back to 2003. You get the upturn and the market's put in a low. Now, the indicator is based on time. It has a lot to do with time. So in other words, the concept is the market's going to only go down for so much time. And at some point, the sellers become exhausted and the buyers start to come in. So we are on a Copic curve buy signal, or excuse me, not a buy signal. It's just an indication that the market put in a low here back in the fourth quarter of 22. So it's just an interesting indicator to keep an eye on. Aggression index, a very important indicator, showing some signs of weakness here. We're seeing the tech stocks starting to get in a little bit of trouble here. We're breaking below that upper moving average. Kind of like if you go back here and look, you can see where that was the beginning of a problem. However, this could be just nothing more than a consolidation within an uptrend. So we want to keep a close eye on the aggression index. 3 economic indicators. You can see here that interest rates are starting to somewhat cool down a little bit. We're back down to around 4%. Like I said, we don't want to get up here. We'd like to see rates get back down here. In fact, down here would be ideal. Now, on oil, we're seeing improvement in the oil stocks. In fact, this earnings season that we went through, the only area that I saw favorable reactions to earnings reports was primarily in the oil and gas group. Now, financial stocks of some kind of rollover here, not bad. We're still above the 200-day moving average, but we are starting to see a little weakness in the financials. Here is the new lows. Again, we're popping up above 40 a day. Not serious. Could be just a temporary blip here, but we don't like to see more than 40 a day. New lows minus new highs. We're seeing where the market really has stopped making new highs, and we're starting to see an increase in new lows. You can see by the indicator that we're seeing deterioration there. ARK Innovation Fund, this is kind of a growthy fund. I just wanted to point out, you can see here just like Apple and the other stocks in that category, which is the growth stocks, we're seeing somewhat of a breakdown here. Like I say, the market is designed to fool you. We take this a day at a time. You cannot get into predicting the future. You've got to just say, where are we today? So I don't like this. I think this is a negative pattern. So I think this is kind of a time to kind of let things cool down a little bit and hold cash and watch your stocks. If you get in trouble on one, you need to let it go. But anyway, here's the Renaissance Fund, which is an IPO fund. You can see another breakdown there as well. Here is the Treasury bond. Now, this is the 20-year Treasury, the TLT. We got a big sell-off in the bond market last week, and now we're getting a little bit of what we would call a dead cat bounce. But it does look like the culprit here is, one, not favorable corporate earnings reports and the fact that interest rates are starting to move back up again. Here's the utility stocks, another interest rate sensitive area. You can see here where the utilities have really broken down here. So that's somewhat of an indication that interest rates are not acting well. NASDAQ Composite, just a final index to look at here. The NASDAQ's been really doing very well, but then we're starting to see that gradual breakdown. It needs to hold that 50-day moving average, so we'll see. So in conclusion, what I'm saying is take it a day at a time. Last week we felt like things were getting very positive. This week we would tell you to cool your jets and kind of sit tight. If you have any questions, please give me a call.